We're back. It is the Hell Money Podcast. I am Casey Rodomore, joined with my co-host, Aaron Redwing. Aaron, how are you today?
I'm great. How are you, Casey?
Doing good. I got a coffee. I quit.
It's kind of late in the day.
Yeah, it's like what? It's like 4:30. It's kind of okay. I quit nicotine, so no.
So this is all you have.
Yeah, this is the only stimmy I get.
Raw dogging reality.
Raw dogging reality. Yeah.
You're getting closer and closer, honestly.
I am, yeah. Although, raw dogging reality and like some deep quotes here. But like I found that one, it was incredibly easy to quit nicotine pouches. I quit smoking, and when I quit smoking, I smoked for like 8 years between the age of like 15 and like 23 or something. And quitting smoking was really hard. Quitting nicotine pouches was incredibly easy. Like I was really nervous about it, but then I did it and it was like fine. And we have a guest today who is a nicotine addiction expert. His name is Matthew Wraith. Welcome to the podcast.
Thank you.
He's not actually a nicotine addiction expert. He is a serious adult, and he's here to bring you a serious adult disclaimer.
Yeah. So I'm Matt Wraith, CTO of Bitnomial.
Friend of the podcast.
Friend of the podcast. Well, how about I met you, Casey, at David Friedman's house many years ago.
That's right.
How long ago?
It was when I
3 years ago, maybe something.
Yeah,
like that.
something like that.
Yep.
I moved to the Bay Area, and
oh yeah, and for people who don't know, David Friedman, son of Milton Friedman.
Yep.
The Friedmans,
the closest thing Casey has to God.
That's right. That's right. Yeah.
Yes, of course.
The Friedmans are actually really interesting. So Milton Friedman, what did he do? He's the chairman of was he an economic advisor?
He was like head of the Chicago school, right?
Yeah,
that's how I know him.
An economics professor.
But the key thing is that he was an influential economics advisor.
Yes.
Did he ever have an important specific position, or was he just like?
I think you're right. He was during the Reagan administration on the Council of Economic Advisors or something like that.
I know him because I came from like the left side of things where he's like the enemy number one.
Well, you made me read at gunpoint Shock Doctrine.
Oh, you read one chapter.
By who wrote
Naomi
that book?
Klein.
Yeah, and I started reading that one chapter of that one book.
I was like,
and I hit so many factual inaccuracies and idiotic moronic statements that like I just can't take it seriously at all. It was basically like countries can do whatever they want and default on whatever agreements they have because they shouldn't care about ever caring about getting foreign investment. And it's like, bro, if you are a shitty ass country, you should not fuck over foreign investors because you need that money. You need investment and technology and talent.
I mean, Milton Friedman's like a privatization, like capitalist, like maxi, right?
Do you think that?
Is he not?
What do you mean privatization?
Like just the definition of capitalism as like private ownership.
When people say privatization, I think they usually mean taking a like government entity and turning it into a private entity. And so for example,
isn't he into that too?
Well, but it depends on how you do it, right? Russia did that, and we got this like crazy oligarchic system where like shit was sold. He probably wouldn't think that that was a good idea the way that they did that. So saying that is a blanket privatization max.
Whatever. He's king of capitalism.
What's capitalism, Aaron?
Oh my God. We've already see capitalism episode of How Many Podcasts.
See capitalism. Anyways.
Yeah,
but
you're derailing.
The interesting thing about the Friedmans is they've gotten like more meta each generation. Yes. So Milton Friedman was like, well, we got to kind of deal with the hand we're dealt. I'm going to be like a policy advisor and I'm going to have like normie economic policies. And then
neoliberalism. He invented that term.
Neoliberalism.
Exactly. He invented neoliberalism.
I didn't even know that.
Term. Yeah.
Wow. Enemy of the left.
Enemy of the left. And then David Friedman, I mean, the real enemy of the left is the left.
Reality?
Yeah.
Oh.
No, it's the left. It's the circular firing squad. But
that's true.
The son of Milton Friedman, David Friedman, is sort of this like anarcho-capitalist, like economic, like philosopher. And he's very much like, well, what would be the best economic system? Milton is like, what's the best rules that we can like promulgate in our current economic system to get like good outcomes? And then David Friedman, where we met at a Slate Star Codex meetup.
Yep.
He is like, what is the best economic system that will lead to a good outcome? Like radical, like clean sheet, like rethink. And then his son,
polycentric law.
Law. Yep. Real anarcho-capitalist, like real,
the machinery of freedom.
Yeah. Real, like we're going to privatize like the cops.
Mm-hmm.
Yeah.
And then Petri Friedman, who's the son of David Friedman, he's like, what environment will give rise to the best economic system.
So then he went into
that would
seasteading.
That's competitive governance, seasteading,
Mhm.
charter cities, that kind of thing. So it's funny because Milton, David, and Patry all agree on the goals, and they all agree on like the outcomes and like what the best economic system is. But Milton's like, how do we like incrementally improve our current economic system?
David's the theory.
David's the theory. What is the best economic system? And then Patry is like how do we create the crucible in which the best economic system can like emerge?
The Friedmans are kind of like your Kardashians.
Yeah.
You know what I mean? Like to me, like it's like the Kardashians are to me what the Friedmans are to you.
I mean, sort of, except I actually
It's like your royal family.
Actually, except like sort of I've met like Patry a few times and like
Kylie Jenner's been in many of my dreams.
Okay, yeah, that's true. Yeah.
But so we met at a Slate Star Codex meetup, and then maybe a week later, we met at the San Francisco Bitcoin Developers.
Yeah, because
yeah.
Had you
SF
just moved to SF?
Yeah,
then?
I just moved to SF, and then like I was like, I gotta meet people.
Yeah,
You know,
I mean,
don't-
it
I
sounds
don't know
like
anybody.
a pretty successful,
You know.
like, just get into it.
Yeah, and then it
Well,
was
Matt
like
is a social guy.
He
Matt's
is,
a very
yeah.
social guy.
Yeah.
So met at the Slate Star Codex, but then it was like, oh, okay, we just became best friends because
Mhm.
it's like, what is the intersection of
Yeah, people
ACX or like
Exactly.
Slate Star Codex
Yep.
and the SF Bitcoin Developers
Yep.
meetup? It's like you and me.
Yep.
Like,
Yep. Yeah.
you know?
Yeah, it's funny, like the rationalists and like the less wrong types, they are like hyper optimizers, and it prevents them from being like really like full-throated capitalists
Mm,
because they in their heart of hearts, I think, believe in like a technocracy.
yeah.
Mhm.
And that like,
Yeah.
well, we can have experts and we can appoint the experts to like positions, and we need the right policies, guys. And it's not like, hey, like the government's retarded. Like it's not gonna work. You can't just write down the good policies and give it to the government. And the government's like,
Oh,
what
yes.
was I thinking? Like,
Yeah.
I'll do the good policies, right?
Yeah.
So that's why that's why it's a weird intersection, because they're not exactly, they're libertarian-ish.
Right.
But then it's like, what is the optimal zoning policy? And then they're like, okay. like,
Okay.
Libertarianism
sit
for
down.
thee, but not for me.
Yeah.
Right,
You know?
right. Yeah.
They just hate the guys in charge because they're not the guys in charge.
Yep.
So then you ended up running SF Bitdevs.
Was it when you first came to SF Bitdevs? Was I hosting it at that point?
I think
or was it before?
Alex was.
Yeah. So Alex Leishman of blessed memory, he moved away from San Francisco. He's not dead. He just doesn't live in San Francisco anymore.
Might as
We'll
well
see. A
be.
lot of people are moving
No, I'm
back.
joking.
Yeah.
You never
Everyone's
know.
moving back.
But anyways, Alex Leishman.
We're so back.
Alex
We're
Leishman-
actually two back.
We're
too back.
Yeah.
Alex Leishman, CEO of River Financial, then Alto Financial, I believe. Or maybe that was before then. Anyways, he was the longtime host of SF Bitcoin Devs.
Yeah.
And he was like, it was like sporadic, and he was like moving away. And I had asked him a few times, like, hey, do you want to have help with the meetup? Like, I can help. And then he like was like, yeah, like maybe, like, let me get back to you, because he was just like too busy. And then like at the last one he hosted, he was like, hey, you want to take it over? And I was like, yeah, sure. And he's like, great. And then I became the host for a while, for like a year maybe. And then I kind of burnt out. And then
It's a lot of work.
it's a lot of work.
I
Yeah.
mean-
and then Matt took it over.
Yeah.
So like we are in the lineage of the SF
Yes.
Bitcoin Dev like hosts.
Mhm.
Yeah.
And now it's on much better footing. We have multiple co-hosts. We have a great space. We've got
Evan.
this,
Shout out to Evan.
Wingate, literally hidden hero of fucking SF
He'd
Bitcoin
be a great
Devs.
podcast.
Yeah, we
guest
gotta
as well
get-
for the
Yeah.
pod. Yeah.
He doesn't know that he's like smart, funny, and interesting.
Yeah.
He doesn't believe that he's smart, funny,
It's
and
like
interesting. And he's
you
like,
don't know
bro,
you're beautiful.
really smart, funny,
you
and
know?
interesting. He's like, oh no, I'd never be a good podcast guest. And you're like, come on, Evan. Like, but Evan makes the lists for SF Bitcoin Devs, which is the discussion topics, and this takes a huge amount of pressure off of the hosts,
The presenters.
exactly.
Yeah.
Yeah.
And I think there's a discursive element to it too, where it's like, you've got like the generator and the kind of discriminator, if you will.
Sure.
Like,
Yep.
Yeah. It's a good setup.
Yep.
Yeah, I think the Bay Area, we're lucky that we have both like Bitdevs, which is more technical Bitcoin stuff. And then we also have like just Bitcoin meetups that are like you go to a bar and you talk about Bitcoin with other people that feel like socially deprived and want to talk about Bitcoin. And I'm not sure like how different that is from other cities. Like I feel like New York and Austin also have that, but I don't have a sense for like what is the Bitdevs distribution?
I used to help with the Chicago Bitdevs one.
Mhm.
And so that's what it was kind of easy to take over in some sense, because it's like, oh yeah, I'd been doing it in Chicago. Chicago had like maybe, I don't know, like 15, 20 regular members. It was, it's like roughly the same size. I feel like as the SF.
New York Bitdevs was the first, or SF Bitdevs was the first.
New York, no, maybe SF was
because
first.
I don't know if SF Bitdevs was first, like the Bitdevs format.
It's
like
Jay
the SF
definitely
meetup has been around forever.
Jay definitely invented the whole Socratic seminar setup. Yeah, so there was like the SF Bitcoin developers meetup, and that's been around for forever.
Yep.
But which we have now kind of morphed into the Socratic seminar setup that Jay and Jay's now here in SF too, and he's been
helping out with the SF Bitcoin devs.
I mean, doing a tremendous amount of work.
So yeah, you work for Bitnomial.
Yes, Bitnomial.
What is Bitnomial?
Bitnomial is a exchange, clearinghouse, and we also have a brokerage wing that we kind of run separately. But we're an exchange for Bitcoin derivatives. Futures, options, commodities.
What are the Bitcoin derivatives that you trade?
So we don't really trade them. We have a platform,
people a vehicle for trading.
Yeah. We have an exchange.
You definitely don't trade them.
Yeah, right.
Pepe Sweat.
No, come on. No, but we have a platform for people to trade futures and options on Bitcoin.
What's a future?
So a future is basically a legal contract that says, like, if you buy the future, that means you're going to be getting some underlying asset, right? Like in our case, it's Bitcoin at the expiry, which is defined in the contract.
Yep.
And you're agreeing on a price today that will then, basically, if I buy a Bitcoin for X price, and then for June or something like this, we like, okay, we have this contract in place. And then when June comes around, I give you the money and you give me the Bitcoin and we're good.
And what's the goal of that?
Wait. I just want to, I sort of want to recap because it's really complicated.
It is complicated.
So I would like sort of summarize that a future is it's just like you're buying something, except you're making the agreement to buy something, and delivery of the thing you're buying and of the money from the buyer to the seller is going to happen on a future date.
Yep.
And you're going to agree to the price now.
Yes.
So on January 1st, you agree that on February 1st, I'm going to buy 1 Bitcoin from you for $75K. And there's like a premium that you pay initially, like a small amount. You don't pay the full price.
You put down some margin.
You put down a deposit.
Yeah.
Like to be like, I'm good for it, bro.
Yep.
And then on February 1st, I buy that 1 Bitcoin from you. I give you $75,000 or whatever we agreed, and you give me the 1 Bitcoin.
Yep.
Do futures, when you create a futures contract, is it always for the current spot price?
No. It's like, or what do you mean by that?
What I mean is like, why? Okay, my assumption would be that futures are, you sort of asked about what's the goal. Futures are to hedge against volatility.
Yes.
Right. So classic thing is like, I'm McDonald's. I sell a lot of hamburgers. Hamburgers have a lot of buns. Okay. We got buns, thick buns. And what are buns made out of? Buns are made out of wheat, flour that comes from wheat.
Beef. Critically.
Beef. Not the buns.
Not the buns.
Yep.
Yes, excuse me. I thought we were talking about a hamburger.
No, yeah.
The whole construction.
But anyway, so like McDonald's is like, I want to like put this hamburger on my menu.
We could put beef into the buns.
We could. Yeah. the carnivore maxis.
We might be onto something.
Right.
But McDonald's wants to be able to say, I want to put this burger on my menu for $1. And like plan to sell it for $1 for the next 6 months, because that's like what my plan is. I'm going to do marketing around this.
Despite the weather and all the things that are trying to stop you.
They know that the price of wheat is volatile.
Yeah.
And so, yeah, it'd be great if the price of wheat went down. But if the price of wheat goes up enough, all of a sudden in a month, they're going to be losing money on each hamburger that they sell.
Yep.
Because they've got this menu price. They've got all this stuff. They're doing these marketing campaigns. they're selling it for $1. It now costs $1.10 to make. So what McDonald's does is on January 1st, let's say, they buy wheat futures and they lock in the price of wheat now. And then the next month, let's say it's $1 a bushel. I don't know if that's like a reasonable price range.
That is, it varies wildly,
So-
which is the point.
Which is the point, right? So McDonald's says, I'm locking it in for $1 a bushel. I know that I'm profitable at $1 a bushel. Next month comes around. They get their 1,000 bushels of wheat for $1,000. Even though the price of wheat has gone up to $2 a bushel, they're happy. They locked in this price and they pay some kind of premium. I mean, the amount that they put down margin initially, and the margin is a deposit on the future price. Yep. And they're going to wind up paying a little bit more than $1 a bushel because they've gotten the not the
There's like a
obligation.
time value.
No, but they've gotten the God, what's the fucking word? It's not an obligation. It's like the opposite of an obligation. The privilege.
Yeah.
Of getting this price in the future, guaranteeing this price in the future.
Yeah, so typically the futures will like kind of converge at the spot price at expiry. But you're right that they typically will
where
be,
do they? But let's say that the price of wheat is $1.
Yeah.
Would anybody at right now?
Yeah.
Would anybody ever be selling futures for $2 a bushel?
I mean, it depends on the exact scenario, but
would there be a scenario where the current price of the future would be higher than the spot price?
I mean, it gets really complicated. Yeah, totally. There
like what's an example?
Like you can end up in a situation where it's like people know that there's like maybe the market
people
is integrating.
know that there's a seasonal demand.
Yes.
And so your November Christmas tree, your November expiry Christmas tree futures are going to be at a higher price than your February expiry Christmas futures.
Yeah.
Even if you're agreeing to both of these futures in August.
Yeah.
You know that there's some sort of seasonal demand.
Yep.
Right.
That's exactly right.
Yep.
So there's all kinds of different factors that come into the price.
Yep.
But yeah.
So how does I can understand from the perspective of McDonald's buying wheat to make a hamburger, right?
And this is just futures. We haven't gotten into options
Yeah,
yet.
Right,
just
we
talking
haven't
about
gotten into
futures.
options.
Like I can
Right.
understand why if you are like someone who's producing something based on some commodity or whatever, that you would want to like lock in certain prices because you're paying that fixed cost in order to sell your fixed product at a fixed cost. How does that apply to Bitcoin?
Yeah. So you can buy Bitcoin futures or sell Bitcoin futures at, again, a price that we agree upon today and then go and execute that later. So
I mean, make it concrete. So I'm selling
if
selling Bitcoin futures to you.
Yeah.
And when we do that, I'm saying I will sell you 1 Bitcoin in 1 month at $90,000.
Yeah.
So we're locking the price now, but why would you want to do that?
I think a really good example is if you're a Bitcoin miner or something like this. You're in a situation where you need dollars to be able to,
Pay
operate
for energy,
your business. Pay
buy
for
more
energy.
ASICs or whatever.
Exactly. You have all kinds of, pay your employees or whatever you need to do. You have a bunch of operational expenses in dollars, but you're generating Bitcoin.
Mm-hmm.
So you have a natural, like, kind of need to sell Bitcoin, and you're very exposed to the price going way up or way down. And if you sell Bitcoin futures, you can lock in that price. And now you know that even though you haven't necessarily mined those Bitcoin yet, that you'll be able to say like, okay, I know that I'm going to be able to sell these at this price at this point in time in the future.
Yeah.
Right. Yeah.
And-
Like mining is a very volatile business. They seem to not care from everything. I mean, we come from the Ordinals side of things where we're like, hey, miners, we're giving you some fees. Like, you want those fees? You want that buyer of last resort? And they're like, what's an Ordinal?
Yeah.
Like, they don't care at all. But in theory, they should care about volatility.
Yep.
In which case, this is essentially a way of stabilizing that volatility.
And it makes total sense. Like probably like at least like 50% of the time that 50% of miners like intellectual energy goes towards like worrying about the price of Bitcoin.
Yeah.
And imagine if you're a miner and on like January 1st, you like sell all of these futures for the entire rest of the year, which there'd be risks to that as well.
Of course.
But you sell all of these futures for all the rest of the year. And then you just turn off your brain about the price of Bitcoin. You just make your investment decisions about like, okay, how can I optimize my infrastructure? How can I like produce this Bitcoin that I have to produce like the most cheaply? You know, those kinds of things. You just like remove that from your consideration.
Yeah.
And in fact, it's like, yeah, you can like centralize that in some like trading nerd, you know, at your company who just like trades commodity markets and tries to like keep prices like stable for you, you know,
or work with an outside firm or something like that.
Yep.
Another good example would be if you're like selling Bitcoin to other people or something like this, you might want to buy Bitcoin futures in order to, you know, again, you've like locked in your price,
right?
You know, and then you can say like, okay, I'm going to have this inventory of Bitcoin later.
Yep.
And
so like an exchange, you mean? Or
I don't know if exchanges would necessarily, but sure. I mean, potentially if they're the ones who are like inventorying Bitcoin and then, you know, taking that Bitcoin and giving it to people.
Yeah.
And I mean, the exchanges are typically like a platform as well, where they're just like letting people trade at whatever price, you know, but yeah, it's the whole thing.
So how long have you guys been doing this and how did you get into it?
Yeah. So I've been working at Bitnomial for 10 years, believe it or not. And I got into it because I guess I got into Bitcoin pretty early as like, I don't know, it's like terminally online libertarian on the internet.
I feel like there's an interesting thing with like OG Bitcoiners where they love to brag about being OG Bitcoiners, but it's like terrible OPSEC.
Right.
Yeah.
And I always like,
I got into Bitcoin really early, but not too early.
Not too early.
And I definitely don't have any.
2017, let's say.
And I lost it all. And
I
then,
lost it all.
Yeah.
No, but yeah, was very interested in Bitcoin. And I saw this problem of like, you know, I think even today, like people, like if you ask people who are running Bitcoin businesses, like what are your biggest concerns? It's like, one, the regulation and the like kind of legitimacy of Bitcoin generally. And then, but the biggest thing is the volatility of the price. They're like very concerned about the price swinging way down or way up, or, you know, when they're trying to do just normal business. And I was like, oh, okay. Like in 2015, we were like, nobody's doing this. And we kind of took it upon ourselves to say, okay, we got to start an exchange regulated in the US that's going to be able to give people Bitcoin futures that are physically delivered. That's like,
explain that.
Yeah. Okay. Sorry. Buzzword. Physical delivery. So one big distinction of like our futures relative to a lot of the other futures that are out there is ours are that simple case of you actually get the Bitcoin at the end of the contract, right? Like
it's a contract for 1 Bitcoin. The buyer of the future gets 1 Bitcoin.
Yes,
in
exactly.
their address.
And they give the dollars and then they get the Bitcoin and that's it.
Yep.
You know, there are other
What's
kinds.
the opposite of physical delivery called?
Yeah. I guess you could say index settled or like a cash settled product.
Cash settled product.
You know.
Yep. What is a cash settled?
Yeah.
Feature?
So there you'll have like a magic number that is kind of like the price of the underlying thing. You know, like I think.
But
like
I mean, the
CME,
key is in the McDonald's case, for a cash settled future, McDonald's doesn't get the wheat at the end of the contract. McDonald's gets the dollar value of what the wheat, the fair market price of the wheat. Yeah. So then McDonald's still has to go out and buy the wheat.
Yes. And there's a concept.
There's not a guarantee that, let's say that it settles at $1, you know, bushel or whatever.
That in the next week when they try to go and buy the wheat, that it hasn't gone up or down. That's called slippage.
Right.
You know,
are there cash settled futures or just cash settled options?
They're cash settled futures. Actually,
what even so for a future, I'm like guaranteeing that I'll buy it. So it's just like you just get the difference. It's literally like the person who's quote unquote selling the cash settled future. Wow, cash settled futures seem really risky because it lets everybody be like, oh, I'm not actually a wheat farmer. I'm just like betting on the price of wheat. And so like
you're degening.
You're pure degening.
Yeah. Basically. I mean, you know, I would say that there's in the long run, physical delivery, I think will be like the thing that wins. It's easy to make cash settled futures. You don't have to deal with people's addresses and moving coins
yeah.
around and all this complicated
It makes
stuff.
sense that for something that like physically exists in reality, that you would not like literally want to be like, all right, put the bushels of wheat in the back of the truck, like I'll take them. But with Bitcoin, you can instantly
do that.
the physical delivery.
Yeah, exactly. Though I would say it's still pretty complicated, like actually getting people to coordinate and like getting people's addresses and doing that in a secure manner.
Yeah. That's probably the harder part, right?
Yeah.
Yeah.
But
like the custodying aspect.
Exactly. But we believe that even though it's harder to do, this is going to be the thing that like really allows Bitcoin to scale and
yeah, I mean, I think like, I feel like we've had many conversations where I've like hated on financialization because it just like it just puts a bad taste in my mouth, although I understand that it's a necessary thing. But I think like there's always this thing that happens with like Bitcoin and like TradFi getting into Bitcoin where like, if you're coming at it from the Bitcoin side of things, you're like, oh, Bitcoin solves all these problems that like exist with our current financial system. And then TradFi comes in and is like, oh, Bitcoin number go up. Let's build this financialization system on our principles around Bitcoin. And it's like, no, Bitcoin's supposed to solve the problem there.
Exactly. Yeah. So, I mean, there is kind of a tension there where it's like, you want to make a thing that's useful for Bitcoin businesses that are actually like doing things in the real world.
On a Bitcoin standard.
Yeah.
Mhm.
On a, yes.
Fully
exactly.
sovereign.
Yes, exactly. So we built that like we understand Bitcoin really well and built something that was, that had like self-custody as like kind of a primary fundamental component. You hold on to your coins right up until delivery, and then you send those coins, and if you're taking delivery, it's like, yeah, you give your address and you just get those Bitcoins, as opposed to like the way that like gold futures work, for example. Gold futures are typically, it's like the gold is in a vault and you're just like trading receipts.
Yeah,
of
it's
the
just
gold.
who's
Right,
the owner
yeah.
of the gold in the vault.
Mhm.
Yeah.
Yeah. Yeah, no, I mean, it makes, and this is also why I just think Bitcoiners are going to be the ones that build like good Bitcoin products for the rest of the world. It's like the rest of the world is not necessarily going to wrap their head around Bitcoin before Bitcoiners will wrap their head around the way that Bitcoin fixes things for the rest of the world.
Yep.
Yeah.
So, very supportive.
Oh, thank you. Yeah. But yeah, so we're an exchange. Back in January, we launched our clearinghouse.
Mhm.
We kind of started with an outside partner for our clearinghouse, but starting our own. We launched the clearinghouse in January of this year.
January, the Aquarius new moon.
Yes, yes.
Mhm. Very auspicious. Great timing. Good work.
There's
Thank
something
you.
that's really
Thank you.
similar about astrologers and Orthodox Jews. That any Orthodox Jew you talk about on any day of the year, they'll tell you why it's a really special holiday.
Hell yeah.
And it's like, no, this is the most special Tuesday, and then astrologers are also like, oh, January month number, day number. Oh, that's a very auspicious.
Mhm. Very auspicious new
Very
moon.
auspicious.
Yeah.
Yes, yes.
Excellent new beginning energy.
Yeah.
But
yeah.
so you launched the clearinghouse in January.
Yep.
I feel like you've been so stressed these last few months. It seems like you guys are doing a lot, but then it's like, I don't really ask you about it because we're just normal friends.
Yeah. No, but I mean, it's all going really well, and we're feeling pretty good about
Good.
the new clearinghouse and being able to offer all kinds of cool new products. Like, we've got our hash price futures.
Oh,
which
yeah,
is kind
hell
of
yeah.
an interesting thing.
Mm-hmm.
But yeah. So right, did we talk about the CFTC?
No,
yeah,
we did not.
So we're federally regulated in the U.S. which
Really
is
regulated.
really
You're like the
regulated.
most regulated.
The most regulated, yeah. So our main regulator is the CFTC. That's the Commodity Futures Trading Commission.
Yep.
And we have a couple of different licenses with them. We've got designated contract market license, which is our exchange license.
Mm-hmm.
The DCO license, which is a designated clearing organization. That's the clearinghouse.
Mm-hmm.
And then we also have a FCM. That's a futures commission merchant. So one thing that's kind of interesting about futures is because
When you say futures,
Yeah.
do you mean futures and options?
Yeah, futures and options, or derivatives, I guess, in general. So we do also have options on Bitcoin futures. Like our options settle to the Bitcoin futures, which is an interesting thing. But that's like
Can you have an option that doesn't settle to a future?
Sure. You could just have a direct, like an option on spot Bitcoin or something. But this is kind of the traditional setup.
What's the difference between an option and a future?
Yeah. So thank you. That's a great question. So, so futures are, as we said, it's that simple, just we agree on the price today and the date that we're going to actually transfer dollars in Bitcoin later. For options, it's an option. You get a choice about whether you're going to exercise or not. So
you have the right, but not the obligation.
Well,
to complete this purchase.
If you are buying the option, you have the right,
but not the obligation.
If you are selling the option, you have the obligation to fulfill whatever that person chooses at that time. So with an options contract, you're agreeing on, just like with the future, there's an expiry date that you are going to be exercising on. There's a, there's kind of a choice whether the option is to buy the thing or the option is to sell the thing. So when you're buying a call option, so call options.
See, now you're getting the anti-financialization.
No, I'm sure these are totally valid ways to like do capitalism. It's just very confusing to me.
Yeah,
there's a buy option, there's a sell option,
put options,
puts and calls. And then on both of those, there's two sides of each one.
Yes,
so
exactly.
There's four different kinds of parties involved in these things.
That's exactly right. So you can be buying call options, selling call options, buying put options, or selling put options.
What's the riskiest of all of these? Who's the most degenerate?
Probably people selling calls. Because let me finish explaining what an option is, and then we can get into the risk profile of these things. So, it's the seller is taking on the obligation.
Right. So the seller of an option is definitely more degenerate than the buyer of an option.
Yeah. Yep. There's limited upside and potentially unlimited downside.
Right.
Whereas
if you don't hedge correctly. If you hedge correctly, there's no downside. Yeah. You can,
Exactly. But that's a whole complicated.
I mean, not no downside.
Right. Not no downside.
Has a little downside of some kind. You know, there's opportunity cost at the least.
Indeed.
Right.
So you're agreeing on a date, you're agreeing on a price that's called the strike price.
Right.
So
of the option.
The strike price of the option is the price of the underlying thing that you're going to be buying or selling for. Okay. And then you pay what's called a premium. So the price of the option is different from the price that you're like agreeing to buy or sell at later.
Right.
But it's basically, if you're buying a call option at some price, you're saying that, like, okay, if the price is above that price, then I'm going to exercise that option. That option is said to be in the money. Yes, exactly. So
you're probably going to execute it. I mean,
you don't have to.
At that point, it's free money.
Right. Exactly. Because you can then have the thing and it's rational to exercise that. But if it were below that strike price, then it's said to be out of the money. And you are, then you're probably not going to exercise.
Yeah. There's probably weird scenarios in which you would exercise it. Like there's a low market price, but actually like, due to supply issues, like you can't get it or you can't get it right away, things like that.
Exactly.
I have a gay man who tells me when to buy and sell options on Robinhood.
Right.
And I never exercise the right. I just sell the option if it's up.
Yeah. Yeah. And that's something that you can do.
Because if I exercise it, then I have to put more money in. Like, I don't know.
That's
it's the whole thing.
Yeah.
I'm not
and
about
then you'll get the actual.
And I literally just answer, okay, yay, heart emoji. Gay man, you know who you are.
So the most degenerate is if you're selling call options.
It's selling either of them. They're kind of both. It's
so wait.
Symmetric.
If you're selling a put, you're giving the buyer of the option the right to
buy.
sell to you.
Yes,
a put option.
Yes, that's exactly
You're
right.
giving them the right to put it.
Yes, to sell. You have to buy it if they exercise.
Whereas the call option is like, hey, I want some. Hey.
Yes.
So
you call them up and you say, I
you
want
call
that
them.
then.
Yeah.
The art of
the
the deal.
seller of the put option is saying, I will buy this at a future time.
Yes.
The seller of a call option is say, you can buy this from me at a future time.
Correct.
Those both seem pretty risky. Like if you're selling a
They're symmetrically risky.
Well, these are not suitable for all types of investors.
These are not.
Yeah,
these are not even probably suitable for most investors. Like
that is correct.
And also, let me this is the most degenerate shit. This is the most degenerate shit. Like, there's the old joke. Like, how do you make a small fortune in commodities?
Yeah,
you start with a large fortune.
Yeah,
that's how you make a small fortune in commodities. I think my like always, like the other thing about options is it's not like, oh, my Apple stock is down like 5%. Like, wow. It's like, no, your options expired worthless.
Yeah.
All that money went away. It's gone. It's gone.
Or even worse, it's like, okay, you have your big pile of Apple stock and then you were selling call options and all of a sudden Apple goes up, a ton. And then that person takes all your Apple stock that you had.
Yep. And also like, oh, yeah, now you have 40,000 barrels of oil.
Yeah.
Because you didn't check the box at the right time. Like, good luck, bro. Like, where are you putting it?
Yeah. Actually, in 2020, oil futures went negative.
Right.
That was kind of an interesting.
Yeah, give this story.
Yeah. So in 2020, during the pandemic, basically everyone was at home stuck and no one was
They were
using
degenning
oil.
on their phone.
Yeah, they were degenning on their phone. And no one was using the oil that was like coming in, So there was like tons and tons of oil piling up in Cushing, Oklahoma, where it all gets delivered to. And then there were these futures that were coming to expiry, and it was like no one's buying all this stuff.
Mm-hmm.
So there was just like a tremendous excess supply of oil, and then it's got to go somewhere.
Mm-hmm.
So basically, what was happening is that the people who had bought oil futures, the people
like
who were
pre-COVID
agreeing to take delivery of oil futures, were buying them around spot price.
Mm-hmm.
Yeah,
right. They were like, okay, great, I'm buying this oil in the future. And then the system starts to like back up, right? And like space to store oil gets like more expensive to the point that
everybody's
needing to take a barrel of oil on delivery is a liability because you don't have anywhere to put it. And renting the pipe space, renting the tank space is now more than the barrel of oil. So you're like, holy shit, I'm willing to pay somebody to take this barrel of oil off of my hands.
That I now have the obligation.
That I want them to have the obligation of doing it. What happened in the end? How did people get
people moved oil around until it kind of stabilized and the system kind of propagated back.
Right.
Until
I'm sure there were tankers stuck in offshore for like a few weeks or whatever. And
exactly.
Oil that rippled back. Oil producing countries scaled back their shipments and production. Yeah.
Yep.
Are you familiar with the Bronze Age collapse?
Yes.
This all makes me feel. I feel like the Bronze Age collapse is like probably my preferred doomsday scenario for now. Which is like general systems collapse, I think is like the phrase that they used for it, where like Bronze Age society became too complicated and all of these systems over the course of like 80 years started like collapsing in on themselves. And I think it was something to do with like a drought that resulted in like less wheat being produced initially.
Isn't this a great example of a complicated system self-regulating?
I mean, sure. I think like the idea of like the stabilization, it's more that it's like, it's funny to me.
They didn't have futures that could go negative.
If only they had
futures that went negative.
If only they
we'd be living in the Bronze Age.
They didn't even have. If only they hadn't been on Roman numerals, they would have had negative numbers, and thus their futures contracts
they didn't even have
could go
negative
negative.
Numbers.
Yeah, it's that they had the futures, but they got to zero, and they were like, "Well, that's it, guys." Like,
I guess
my
over.
favorite joke is like, the Roman Empire fell because they did not have negative numbers. They did not have the number zero, and thus could not indicate the successful termination of their sea programs.
Right.
I roll for any audio listeners. Okay, so maybe then general systems collapse shouldn't be my preferred doomsday scenario because we have futures and options trade.
No. Like the thing is that this is kind of a really good example of like a complicated system self-regulating, and like this is just such a great example because it's like the price signal allows for back propagation of pressure and demand like through the system. So you
all
have
the way
like,
back to the oil well.
Yeah, so you have like degens like degenning on these futures and like the price is going up and down and it like starts to get negative. The degens are then panicking, are like, where are we going to store this stuff? The people who are selling storage space are like pricing it higher and higher. They're delaying shipments. They're saying like, hey, like don't go into the port and try to like pump your oil out of the tanker, like just chill offshore. And it's all going through the price system. And then, you know, some sheik, you know, in Saudi Arabia is like, okay, I'm going to turn down the knob on my oil head and like make less oil come out of the ground.
Mm-hmm.
It's all back propagation of information. And but our system is really complicated and we do get crazy bullshit. Usually though, that's because of the state putting its thumb on the scale, like saying like, oh, like, you know, all this like shitty ass debt related to housing, we can't just let people go bankrupt. We can't let the forest fire flush the deadwood out of the system. We have to like keep propping it up. And just like when you're not letting any forest burn at all, you get all this flammable material and then it does burn and then it's an absolute catastrophe.
Yeah, I mean, I think like the complaint that people who don't worship the invisible hand have is that like in reality everyone at the top gets bailed out when they lose.
Sure.
Right.
Yeah.
Like that's the thing
Yeah.
is like you take on this risk and like if you're like a, you know, person buying GameStop on Robinhood or whatever, like you actually take on the risk.
Yep.
But if you're like close enough to like the money printer,
Yep.
you don't actually in practice, you don't take on the risk.
I mean, it sucks. It's like you ask people like, well, what is capitalism? And they say, oh, capitalism is the pursuit. It's an economic system where everything is operated for the pursuit of profit at every cost, at any cost, right? And it's like, okay, well, in that case, like capitalism is like definitionally bad. Like I don't like that capitalism, and like they think that it involves like always like state intervention, and it's like, no, that's crony capitalism. That's not actually capitalism. Like that's what people don't like. They don't like. It's actually kind of funny. I mean, like a lot of the people who are sort of anti-capitalist on the left, you know, listen, like the capitalism that you don't believe in, like I don't believe in either.
Yeah,
you know?
yeah. And consider the alternative, you know, if you had to do that back propagation totally top down, right? Like in the Soviet Union, they basically, after Stalin died, they, you know, tried to do this like beautiful experiment of like, we're just going to have a big computer that calculates
the
what the
technocrats.
optimal yeah, we're just going to calculate the optimal economy for everything, right? A good book recommendation, Read Plenty, forget the author, but it's a great book. It's kind of a fictionalization.
R.E.D. Plenty?
Yeah, Read Plenty. It's a kind of fictionalization of the kind of post-Stalin Soviet Union, like, oh, we're going to do cybernetics and take over the economy and do like we're going to calculate the optimal
the Soviet
economy.
Union worked kind of vibes.
Right? Yeah. And well, in the book, and in reality, it ends up failing for very complicated reasons. But basically, it's that the information can't travel through the system.
Yeah, I think it's actually very, very simple reasons. It's like the information can't travel through the system. People aren't incentivized to act on the information. Like they don't have the information. It's basically like you don't know what you don't know.
Yeah.
You know?
And it also turns out that computers are like not like they aren't able to take in perfect information or something. Like, you know, like even if you had all of the information, there's like a computational horizon where you end up like just not being able to compute what the optimal outcome is.
The system gets really complicated.
Yeah.
Yep.
General systems collapse.
Yep. General systems collapse.
Systems collapse. And I mean, look what happened.
And look what happened.
Yep.
You know.
Yeah.
But
I do have to say, you know, I kind of appreciate they tried.
Yeah.
It's
good.
I mean, it's nice. I wish that people would pay attention to that like, hey, look, every time, you know, real like state communism or socialism has been tried. It's been really bad and a lot of people have died. Like it'd be nice if people paid attention to that instead of being like, oh, well, that's some bullshit. They're actually capitalists in disguise.
I kind of think we need new experiments. Like my whole thing is like, I don't really care communism, capitalism, like whatever. It's more like I just want to see people trying things and like failing and also succeeding. And then like we take little bits and pieces. Cause I think, I mean, whatever, I'm derailing the conversation, but like, I feel like part of the stuckness that happens in political discourse is that we're like stuck in 20th century ideas of politics that don't apply in a digital age. So, you know, like if your idea of capitalism or communism is based on like a pre-digital US or Soviet Union, like we're just living in a very different world now. And I'd like to see, you know, like I'm rooting for someone to like try communism now, personally. I'd just like to see it happen.
I mean, I would like more examples of communism failing. I'd like more visible examples of communism failing. So in that respect, I'm like on board.
What we just need,
but I
like,
also
it's
don't
like
really like the carnage.
Yeah.
Like the death.
Okay, sure. I'm just saying it's like, you know, you can't just like theory sell your way to utopia. You know what I mean? You gotta have to like,
well,
you have
you
to
can, but you have to be right. You know?
Right. Yeah. But like, I think this is the problem with like science as well, right? Like, I mean, you can't just have like theories. You have to do experiments.
But I mean, like,
You have to do
why is academia gone so wrong?
Oh, don't get me started.
No, but it's the same thing as the sort of like looking at the financial crisis and being like, oh, that's a problem with capitalism. Right?
Peer review is the Politburo.
Yeah, indeed.
It's that. What's the problem with academia? Like, why is academia gone so wrong? It's like, well, it gets funded by people who aren't funding things based on the outcome, right? And it's the funding is being sought by scientists who are seeking funding and not really caring about the outcome because they're not incentivized to. Again, it's like a fiat money printer problem. Science is fucking great. The scientific method is fucking great. Like, you know, getting shit right and like doing things based on data is great. It's that like, well, what do you get when you pump money into an industry and it's not based on results? You get like moral rot, right? And it's like, science is great. Academia sucks because it's like funded by this fucking slush fund, you know?
But that's what we see in everything. I think that's why I feel like Bitcoin is a bipartisan solution. You know what I mean? Or separating money and state is like a bipartisan solution because I think that's part of what...
I'm just saying, like, let's not criticize science. Like, science is fucking awesome. Like, science is fucking rad. Like, science gets us everything. The people in academia, the problem is that they're not doing science and they're not forced to do science.
Yeah. I mean, I think like my point was more just that like I think that you can have as many ideas about what a great society would look like or a great economic system would look like, but until you have examples that you can point to, it's very difficult to know in reality.
Yep.
You're never going to be able to account for all the variables.
For sure.
And like that's something that like I really liked about like going to Singapore and learning about Singapore because I feel like in many ways Singapore is like a political economic experiment of the 21st century. You know what I mean? Like it's a very like open digital society and it's working for what they need, you know? And like there's trade-offs that they make that I don't think I would want to make or that I don't think the US could make and it wouldn't make sense here. But I'm like, I like want to see more Singapores. You know what I mean?
Yeah. It's really unfortunate that the unit of political organization in the modern world is the nation and not the city. It's the organization, the unit is the nation or the country and not the city. And it's unfortunate because cities are much more dynamic, much more local. There's many more of them. They have like concrete problems. It's actually pretty easy to agree when cities are like better run and worse run. You know what I mean? It's like if you look at Singapore and San Francisco, it's like, oh yeah, Singapore is a better run city. Yeah. There's just it's like maybe San Francisco has different like goals or ideals that are different from the goals or ideals of Singapore. But in a very concrete way, you can say, yeah, the people who run San Francisco are fucking up. The people who run Singapore are not. And so it's unfortunate from the point of view of wanting more competition, wanting more experiments, that, you know, the unit of bundles of laws is the country, which means that cities can't experiment with laws, can't experiment really with what they're doing, right? SF can do a little bit of zoning experiments here and there, but like not much else. They don't really have that much freedom. They're within California, which is within the United States. A lot of their law, their policy, their money, everything is set from the top down.
Yeah,
right?
I want to see like a capitalist Emeryville, a communist Oakland, a fascist San Francisco.
I mean,
what would the South Bay be in that like dynamic?
Oh, like a monarchy,
it'd be like
some sort
I
of
was gonna say like an
technology.
oligarchy. Yeah.
Yeah.
I want to see all of that play out in the Bay Area.
Gilroy garlic farmer, like royalty.
Yeah, exactly. Yeah. No, I mean, I've derailed. I don't even remember how we got onto this. I guess general systems collapse.
What did you study in school?
I studied physics.
Yeah.
I was a
Nerd.
science guy, weird fellow
STEM
ex-scientists. Yeah.
STEM heads.
But
Where did you study?
I went to UIUC, University of Illinois, Urbana-Champaign.
And what's
Mm-hmm.
it like?
There's a lot of corn there.
Okay.
Actually, on UIUC's campus, I believe there is the oldest research corn plot there.
Oh, a research corn plot.
Yeah. Oh, yeah.
Damn. All right. Okay.
Yeah. So,
That's like going to be responsible for the demise of the world at some point. You know what I mean?
Well,
like the experiments they did on corn there will be like traced
or,
back.
I mean,
Or the
It's
saving.
like the underlying infrastructure that holds all of this up. I
Mhm.
mean, corn is very important.
Yeah, we could go off on corn. Well,
Yeah.
wait, is that how big is that school?
It's a big school. It's kind of comparable to Berkeley, I think.
Yeah,
Like
'cause I went to Penn State, which is like large state
I-
school.
also
It's
very
probably a
comparable.
similar vibe.
Both Big Ten schools.
Farm school.
So it's I think it's like 40 something thousand students.
Yeah. I think Penn State's like 60.
Oh my
something like that.
goodness.
Yeah, it's huge. But
Wow.
it was like farm school turned like research institution, which is probably
That's-
similar.
So
Best place to go study
yeah,
STEM.
they're land grant schools was the but yeah, Big Ten land grant school. It's a great place to study physics, but also learn about corn and the underlying.
I've maybe a physicsy question that you can help me with. Yeah.
Sure.
Can you tell me about slip statistics of dislocation avalanches under different loading modes?
Yeah, I can. Casey is referencing a paper that I was an author on a long time ago.
Wow. What?
Yeah, that's
where
a
were
blast
you
from the past.
Where were you in the author list?
Somewhere at the end, I'm sure. Or
Nice.
in the
No,
middle.
I believe you were number 2.
Was I
This one.
actually
Second
number 2
author?
on that?
Yeah.
Oh, cool.
Wow.
Yeah, so I think that one was my like senior thesis. And I had actually I put a lot of work into it. And I kind of decided to leave academia. And I was actually
Was
still
it
working.
because of that paper that you were like, I don't want to be in academia?
No, I think there were a number of different things that led me to leaving academia. One of them was my wife, who is why we moved here to the Bay Area. But she got a job in Chicago, and I was like, okay, I gotta follow this girl. So I went to Chicago for love. But also, yeah, I mean, physics was UIUC was beautiful. It was like this really incredible, like everyone was super collaborative and like really working together. Like, and I kind of realized with like going to some other schools and like seeing what my prospects were for grad school that it was like, oh, okay. The other physics departments are not like UIUC.
Yeah, physics is notoriously like isolated, cutthroat.
Yes.
I think a big part of it is that like a lot of the low hanging fruit has been picked in physics. And so
Yeah.
it's like there is quite a bit of competition in order to get any sort of interesting finding in physics.
Yeah. Yeah, exactly. And I feel like I was working on some really interesting stuff that was like both theory and very practical. Like what we were doing was like complexity theory stuff. It's like,
I think I'm getting that from the title of this paper, and also tuned critical avalanche scaling in bulk metallic classes.
Yes.
So what is this? I'm just going to guess from the title of this paper. Slip statistics of dislocation avalanches under different loading modes. I'm guessing that a loading mode is like you're talking about physical like strain or stress.
Yep.
And a dislocation avalanche is when you have some like stable structure and then suddenly like something like breaks and then it like, pile of sand starts going or like a crystal structure breaks. That's
exactly right. So what we did in that specific paper was we had like different kind of metals that we were, crushing. And you can look
early at the hydraulic press channel.
Yes, early nano hydraulic press channel. So these were like, I should, if I had the idea to make the hydraulic press channel of like nano hydraulic press channel.
This is why we know that academia is bankrupt, because the hydraulic press channel came out of Finland and not a physics research program.
Yes, exactly. Right? No, so like I was doing the hydraulic press on these like little metal pillars that were like maybe like less than a micron in diameter, like really tiny.
Yeah.
Like maybe a 40th of the width of your hair or something like this.
Yeah.
You crush these things, and when you crush them, it's very, as you said, like it kind of goes in slips and spurts. It kind of will flow for a bit. Well, there's an elastic phase, which is like, okay, you squeeze it and then you pull back and then it just bounces back to where it was originally.
Right. Where the electrons are sort of acting like springs.
Yes.
And then they like spring back.
Yep. Or the atomic lattice is acting like a spring.
What is the atomic lattice?
Like, so if you have a metal,
yep,
it's a crystal.
Yeah.
And
I didn't know that metals are crystals.
Most metals are crystals. Actually, that second paper that you mentioned is about bulk metallic glasses. They're metals that are amorphous.
I thought that metals' defining characteristic was that they were amorphous and that everything was just kind of glued together. There's free electrons all glued.
The metal component is actually more about like the conductivity and like the way that it responds to electrical impulses.
But isn't that also because there's like free electrons?
Yeah.
And that also determines how they like, whatever.
Yeah. That's roughly correct. But you can have that like flow of conductivity.
Oh yeah, but of course,
whether it's in a crystal or in a glass.
But also but what am I talking about? Like people talk about annealing all the time.
Yeah.
And annealing is all about getting different structures out of the metal atoms. So yeah, of course there must be some structure, like some substructure there.
Yeah, and even in those glasses, there is like some quasi crystalline regions and stuff like this. But
does the dislocation avalanche happen after like the atomic, you said atomic lattice?
Let me define what a dislocation is.
Okay,
so a dislocation is so if you had a perfect crystal, there would be no dislocations.
Okay.
It's like a dislocation is you remove one of the atoms from the crystal and you get like a like kind of a like a gap or something. Like it's a weird missing piece of the crystal. And what you'll get is the dislocations can kind of move in some sense, and they get like tangled up with each other.
Sure. Like, I mean, you have like, a missing thing here.
Yep.
Right. And then that's a movement that like preserves the dislocation. Right?
Exactly.
And then like, now it goes like here. And now the dislocation is like down here.
Exactly.
Yeah.
Exactly. So when you're crushing these things, the dislocations move and they pile up and they get like bunched up on each other. But then you'll overcome some barrier and they'll like, start flowing again. Right. So you'll be in that like elastic phase where it's like, okay, you're crushing the thing and then it stops moving and it's like building up pressure. And then you move past that and it'll kind of come down like an avalanche sort of, and it'll just keep going. And so what we were looking at was the probability distributions of those sizes of those avalanches under different loading modes, which is like, say you loaded it with constant force or if you loaded it with constant speed or something like this. So you crush it with where you're trying to keep the speed the same. You crush it where you're trying to keep the force the same.
It reminds me of a lot of like exercise science stuff where you're trying to figure out what the important variable is and you like keep one thing the same and then you vary these other things to try to figure out like what you care about.
Exactly.
Physics is the only real science.
That's right.
And so, there are two kinds of, this is an Ernest Rutherford quote, I believe. There's only physics and stamp collecting. That's all science.
Indeed. That's like a physics dad.
Yeah, sorry, physics dad joke from Ernest Rutherford. But yeah, one of the goats. But yeah, so with these things, you crush them. But what we found was, and this is what our theory predicted, would be that basically the distributions were there's the same underlying structure of the probability of these slips, regardless of the loading mode, which was kind of interesting. I mean, I'm sure that, but you have to like coarse grain it a lot to be able to see, like if you zoom out and squint, you'll be like, oh yeah, it's kind of the same. But then if you get into the details, it's like, no, okay, they are actually like very different.
Interesting.
And so I don't know.
Small things look like big things, but like not provably.
Exactly. But and yeah, that was the model that we were using was like scale invariant. Exactly. Like small things look like big things. Yeah. No, that was fun, but I definitely got like, I don't know, not jaded. I don't know if that's the right word, but like, yeah, frustrated with academia. I felt like I was going to be in this like very narrow box for like a very long period of time.
Right. Yeah. I mean, listen,
like,
slip statistics of dislocation avalanches under different loading modes. This is like 8 levels of drilling down into minutia.
Yes.
You know?
Yes, exactly. And like all about some theory that's like, I don't know. I mean, I loved it. It was a lot of fun, but it was also like, no, I want to do real things in the real world. And that kind of led me to Chicago. And then I started working on
what
Bitnomial.
do people do in Chicago? They do commodities.
They do commodity finance. That's exactly what they do in Chicago. Yeah. So, yeah, most of our company is based in Chicago. And that's kind of like where most of the futures industry is. And that's because Chicago,
really?
Yeah. It's kind of the main industry of Chicago in a lot of ways.
Is there like a river thing going on with
Totally.
that?
Yeah.
Like I know that like
the
Chicago,
train cars,
like packing yards,
the
like
trains.
meat packing in Chicago is huge.
Interesting.
Yeah. And anytime you have centers of commodities, i.e. corn, beef, anything, then you kind of get commodities exchanges.
Yep.
Go up and down there.
Naturally.
Yeah.
Right.
Yeah,
exactly.
Yeah.
So, you know, and then it just kind of like kept expanding until it was like, oh, Chicago's in control of like all of commodity finance in like a very real way.
Yeah. I really
including Bitcoin.
I have a real soft spot for Chicago and commodities because it feels like a real organic.
Chicago is the most like, I have a friend who made a tweet once that was like, you know, don't tell like I'm visiting my friends in Chicago. It feels like I'm visiting a tribe lost in the Amazon, you know, or like an uncontacted tribe. You can't tell them about the outside world or they'll be like, because they're all like living with, you know, like in a nice house with family. They're living the American dream, right? And that like, oh, outside of Chicago, it's like just like
Mad
severely
Max,
severely dysfunctional.
Yeah.
And that like, oh, they're living at the peak of Mount like America in some way.
Yeah. But the regulation is also very like, it feels more bottom up than being top down. It wasn't like, you know, the government is like, oh, we need to regulate this stuff. It's like, oh, we've got these like fucking, you know, people are trading these like, you know, pig bellies and I guess we're going to have an exchange and there's going to be regulators, and the regulators are more sort of I don't know what to say, like outcome oriented. It's not about like some legislation. It's like, okay, did everybody who's party to this like transaction like behave in a reasonable way?
Yeah.
Like then, okay, like, you know, no harm, no foul, like kind of thing.
Yeah. I mean, like a lot of the regulation came in, like the commodities exchanges in Chicago have been around for more than 100 years, like, you know, 1800s and such. But like a lot of the regulation came in like the 70s and stuff like that. I mean, there were some very light regulations earlier, but then it was like really, like somewhere in the 70s is when
WTF happened in 1971.
Yeah,
it was the regulations
the
on the
Commodity
commodities
Exchange Act. You know, or what? No, the Commodity Exchange Act's probably older, but there's.
I'll blame it on that. Why not? This is a misinformation podcast. That's the first rule of How Money podcast.
I can't make materially
You can't spread misinformation.
Yeah, I'm not spreading misinformation, but yeah.
I think you make a very interesting case for why you think that futures, that Bitcoin derivatives are important for Bitcoin's future and Bitcoin's success. Can you make that case?
Yeah, sure. I'll try my best, but it's basically that there are all these businesses who are out there working on Bitcoin, trying to operate in Bitcoin, and they are constrained by reality and the price specifically, in that they need to pay for things in dollars, like we were talking about before.
Yep.
And that if the price of Bitcoin swings wildly up or wildly down in a inopportune time for them, or like a mistimed moment, that can be devastating for a business.
Yep.
And if you're not in there really making sure that you're hedged appropriately and that you're controlling your risk exposure, that you're just going to get blown out. And if nobody is building this infrastructure to make it so that people can smoothly operate through these volatile times.
Yep. Through these volatile times, friends.
Right.
We're in volatile times.
Through these volatile times, you'll get like you'll just get to a world where Bitcoin is kind of constrained naturally. It can never grow beyond a certain
Wild West.
It'll always be at the periphery.
Curve. Yeah.
Where people can't, people won't invest into it because they don't see the ability to grow beyond a certain size, beyond these, like upswings and downswings and things like that.
Yep.
And specifically, I think like the miners in particular are like systemically important organizations.
They are the Bitcoin security industry.
Yeah. Yeah, exactly. And that if you can't operate one of those businesses and just keep going, I mean, the counter argument to that would be that like, oh, one dies, another will spring to take its place. But I think there's kind of this meta point of like people won't invest into it if they don't see, or like maybe another way to phrase it is like, say you're operating an airline or something like this, and you're just taking flyers on the price of oil.
Yeah.
What do you
mean taking flyers?
Like what I mean by this is
you're using flyers in a different meaning. You don't mean people flying on a plane.
No, I don't mean people flying on a plane.
Yeah.
I'm sorry. What I meant was like that they're, selling tickets at some price and then, or like the hamburger example or McDonald's. Let's go with McDonald's.
Let's keep with the oil. I like the flights.
Yeah. We could do McDonald's, we could do oil, but like if you're a business who is, just wildly exposed to the price of Bitcoin, you're not going to be able to get a loan, or sorry, not Bitcoin, oil.
Yeah.
If you're just wildly exposed to the price of oil, you're not going to be able to get a loan to expand your business.
Right.
Because you need to convince the bankers.
Right. Whereas you say like, hey, I'm actually fully hedged against the price of oil.
Yeah.
When you're considering whether to give me a loan or not, you don't need to think about that at all.
Exactly.
Yeah.
You can just kind of neutralize that in the equation. And it makes it much easier for lenders to say confidently, like, yes, I can give this person money and they can expand their business and grow and not have to worry about these crazy downsides. Yeah, it's interesting. I think Bitcoiners have a very immature attitude about Bitcoin. And the source of that immature attitude is because they really like the volatility. Yeah.
They like the fact that the number is going up. I like the fact that the number is going up. But in a way, that's actually a really boring part of Bitcoin.
Yeah.
At some future date where Bitcoin has like fully monetized, there won't be very much volatility at all. The price of Bitcoin will be going, or the value that each Bitcoin can buy will be sort of going up at the rate of like productivity increases, global like productivity increases, which will be like few percent, maybe more, hopefully, if everything's productive and the economy is growing. But it's not going to be like volatile.
Yeah.
And there's still going to be all these interesting things about Bitcoin, like the fact that it can't be printed, the fact that it can't be confiscated, the fact that it can't be counterfeited, the fact that it can be instantly transported from place to place.
Yeah,
exactly. Yeah. And derivatives allow you to hedge against the volatility and get yourself to that future place where actually Bitcoin really is this, the volatility isn't there, but there are all these other interesting things about it. The underlying characteristics are like dominate then.
In that example where you were saying that Bitcoin isn't very volatile, I think that will be because there is a healthy futures industry and stuff like this where people are, it has a kind of naturally stabilizing force in the...
So why do people argue that derivatives are naturally destabilizing? Because I hear that argument a lot.
Yeah. So I think in like the housing crisis, for example, a huge part of that was these, like almost the whole story is these synthetic derivatives where people were really out there in the abstraction curve of like the financial stuff where it's like they're not intimately connected to like what is actually going into this thing. And like,
it was basically like, to put it in my own understanding. It was like that these mortgages that were actually quite risky were sort of like packaged together and labeled as like not as risky as they were individually.
Or just as good as,
And it was because it was like, well, we're kind of leveraging on all these things. And so all these things packaged together, it's not as risky as this individual thing if you zoomed in on any individual part. But it was an abstraction layer that then like divorced you from the reality, which was that it was a bucket of high risk mortgages.
And also that like, if you have bets on bets on bets on bets, it has this like kind of exponential runaway effect where it's like, oh, okay, if your bet relies on this other person's bet going well, and then that doesn't, and then you have another person who has a bet that relies on this other person doing well, et cetera, you like can end up in this situation where everybody is systemically affected.
Right.
I think that for us, the physical delivery component of that grounds us in reality, right? You have to actually move Bitcoin.
At the end of the day, somebody is going to be transferring some Bitcoin to somebody else.
Exactly.
And so these people, if you're just making these notational bets, like they'll get wiped out.
Yes.
They'll get wiped. I think one of the hard things for people to understand is that like a healthy market is not a market in which nobody gets wiped out.
Right.
It's a market in which the people who make the wrong bets are getting wiped out all the time. And so people will come, they'll make bad bets, they'll get wiped out. But the people who like stick around, who are selected for, are going to be making good bets.
Yes.
You know what I mean? And it's like, you don't just get like, do the good thing. You can't just be like, okay, we're going to make policies that's going to make the traders all do the good thing. It's like, well, the bad traders are going to get wiped out and the good traders are going to get rich. And over time, this is going to lead to a bunch of good traders that like make good bets and allocate things efficiently.
Totally.
Yeah.
Yeah.
Yeah, I don't know. It's like I'm in the superposition between like abstraction is good and abstraction leads to general systems collapse. You know what I mean?
It's like I think
good abstraction is good, bad abstraction is bad.
Yeah.
I think the problem is like, well, actually, I mean, I think the financial crisis and the mortgage derivative stuff is really fascinating. Like, I think the easy argument that I would make, just reaching for my priors, is like, oh, all these people knew that they were going to get bailed out. And so they didn't care about the risk.
Moral hazard.
And then, like it's like the government can't let the value of the housing go down. And so they're going to pump money artificially into this economy.
Yep.
So that one, you get like everything overinflates.
Yep.
And then when it deflates, people get bailed out. But I kind of wonder, I mean, like, I don't know that I fully buy the moral hazard thing in the sense that I think that people do make more risky bets, but also like none of the executives that got bailed out, they didn't think that it was good. This was a fucked up situation. They got fucked. The bailout was like not fun for them. So it did create some moral hazard, but like they would have preferred to have avoided that outcome too. That wasn't good, you know, like it's like it's complicated.
Yeah, but it's
It's
like the risk
complicated.
for me, not for thee, I think is the problem with it, right?
Yeah.
Where it's like a bailout is better than total ruin.
No, totally. Like I think the bailout was bad, but I'm like, was the fact that the bailout was coming like the only factor that led this to happening? Was the fact that the government pumped money into this market, was that the only factor? Without those two things, if the government hadn't pumped in the market and everybody knew that it was going to fail, maybe like you're right. And that actually like, yeah, once you get to this level of abstraction, you do get like shit gets fucky. And that's a third factor in addition to the money getting pumped in and knowing that they're going to get bailed out.
Sure.
Yeah.
I'll take it. What else should we talk about?
So I have a question. It's something that I've been thinking about a little bit. It's like, I think one of the things, I think that there's a lot of people don't like it when other people make money. It's something that we kind of don't like. I don't know what it is. It's
jealousy.
Jealousy. It's easy to blame people with a lot of money. And like, who makes money? Well, investors make money.
Yeah.
You know? And so I was thinking about like, well, what is one of the really good roles of investors that we should all be like kind of grateful for? And it's something that I don't know what the word is for it. So it's that investors bring, they time travel demand from the future into the present.
Liquidity.
Well, no, I'm kind of thinking.
Yeah,
I mean,
kinda,
it is liquidity, but it's a more specific thing. It's like, okay, like in November, people are going to want to buy Christmas trees. Okay, and it's January.
Yeah.
Okay, and the people who want to buy Christmas trees, like the consumers, they're not interested in buying Christmas trees now. They're not even interested in thinking about it now.
Yeah.
Right. And like, okay, maybe the growers, you know, who want to grow Christmas trees, they don't even have the money to buy the stuff to grow Christmas trees, right? Like they're like, okay, well, maybe I can see the demand, but I don't have the money to start growing Christmas trees. I'm going to keep growing wheat or whatever. But an investor goes, okay, I see the demand that's going to happen in November, and I have some capital, and so I'm willing to start like servicing that demand now. Start preparing to like service that demand now in the present. And so essentially what they're going to do is they're going to like drive up the price of growing Christmas trees, in the sense that people are going to get rewarded now for like growing Christmas trees. And so the specific thing that I'm interested in, like, yeah, this is a function of liquidity. It is a function of price discovery, right? But it's a very specific aspect of that. There's demand in the future, and they bring that demand to the present so that we start directing resources. And then November comes around, and like magic, there's all these fucking Christmas trees for everybody to buy, and like everybody's happy. Everybody's like better off. You know what I mean?
Yeah.
But what is that called? Like is there a more specific term for than liquidity or price discovery or, you know, taking risks or whatever?
That's a really good question.
I feel like it's something to do with like just forward thinking for society in general, right? Like this is like what people want their government to do. They want their government to say like, oh, we're going to need flu shots come flu season. We're going to make sure every hospital has flu shots. And that's like people's idealized version of what like a good government does, is it like prepares for a future where people need something.
Yep.
And so I think what you're describing is just like, it's future thinking with like capital.
Right.
You know?
Long-termism, I guess.
Yeah.
But,
Yeah.
But it's like, I think people like, it's like, well, the government isn't actually incentivized to do any of those things. Like it's equally incentivized. Like, I don't know, if it prepares for flu season and gets all the flu shots, then flu season comes and nobody even notices. Versus it's like a panic and the government is like, all right, we're on this, people, don't worry. Their jowls just flying. Right? Like there's actually no incentive. Like that's what we want them to do.
Right. Yeah.
But like the investors like who do this, who predict the Christmas tree demand, like they get rich. Awesome. So they're going to do it again next year. You know what I mean?
It creates an incentive around forward thinking.
Yeah.
But I think that then the thing, like, you know, again, I'm put on my leftist hat. It's like, I think the thing that then bothers people is that they're like, well, what did that person do to get the money before the Christmas tree grower? Right. And like, I think the thing that is like the complaint is it's like, oh, these people didn't deserve that money. Like that they got
just had it.
They cheated the system.
Which people didn't deserve it?
Like it's that, like I think, like I think this is like
I'm just
a
confused.
justified.
Is it the investors?
Yeah. Like so okay, in the Christmas tree example, right? People want to buy Christmas trees in November.
Yeah.
In January, the Christmas tree grower and the investor recognizes that future case will exist, and they work together.
Yeah.
And then the investor takes a portion of the profits.
Yeah.
And all they had to do was provide the money.
Right.
And I think the thing that like makes people angry about that, and like every other case, Christmas trees is like a very isolated example, is that they feel that the reason why the investor has the money and the Christmas tree grower doesn't have the money is like an immoral situation or like an unjust or unfair situation.
Right. And we have to go back to like, well, how did they get the money for that? And then like, oh, but they made it doing Christmas trees last year. Well, how did they get the money before that?
Yeah, but
some sort of like original sin.
Yeah, but it's kind of reasonable in the sense that like, like if you are the Christmas tree grower who lost your house in 2008 versus the investor that got bailed out in 2008, then it's like you're not starting on even footing to be like the investor class. Like if the investor class and the financial class has different rules than the rest of us, then it's like they are just getting rich off of having money.
Oh yeah. Oh yeah, there's a casino that you can go gamble at, and when you lose at blackjack, the government like bails you out. And I'm like, well, I want to go to the casino. And oh, sorry. Like, well, of course you can't go to that casino. Like,
if we let everyone into the casino,
totally.
It wouldn't work anymore. So I think that's the like,
totally.
When you talk about like being grateful to investors, like I think in a capitalist system, like an actual capitalist system where losers lose and winners win, sure, it's like great that you have someone with liquidity or forward thinking, whatever, in order to like
taking capital allocators
to be incentivized to put that capital into something that won't pay off until later. Like that incentive system works. The problem is that like the haves of our society are perceived as undeserving. And I think it's true in a lot of cases,
Yeah. I wonder why they don't, like, why is their conclusion then they go like, oh, capitalism is bad, but do they just, but they don't just want to like get rid of these like bailouts. They really want to like they want, for example, they want a lot of redistribution of wealth. They want higher taxes, and they want, when you make money, that money gets given to somebody else.
Mm-hmm.
And that's not just like, oh, let's like fix this like imbalance. Let's stop bailing people out. That's like, let's actually throw sand on the gears. You know what I mean?
Yeah. Well, I think it's
why,
a fundamental belief that like the government represents people.
Yeah.
And so if the government was funding the Christmas tree industry, or the government was funding the flu shot industry or whatever, that like that's a pooling of all of our interests into one entity.
Yeah.
In reality, that's not how it functions. Just like in reality, the investor that's forward thinking is like not necessarily actually a genius with their money.
No,
they're probably like an idiot.
Yeah,
Like that's actual reality.
Yeah.
And then it's like when you meet these guys, it's like you realize how stupid they are, and it makes you hate them even more.
Yeah,
you know what I mean?
Yeah. And maybe it's also that they are like, well, if we hadn't had these like centuries of injustice, we could just stop the bailouts. But because everything is so rigged for everybody, we need like a massive corrective redistribution.
Yeah, you guys got a bailout before, I get the bailout now.
It's like it's like the genuine belief in corrective racism, right?
Yeah, and like I don't know, I think it's an understandable impulse. I don't think that like. Again, this is where I'm like, let's try experiments, people. You know what I mean? Like, like let a town do this and see how it goes. Like, let a country do this and see how it goes.
Yeah.
I don't know. I think we are in a pretty broken system, and the desire to try solutions is high, but then the friction to actually trying them is also high.
Yeah.
So I don't know. Let Oakland bail out the Christmas tree industry.
Fuck yeah. Do it. Yeah. I wish we had some city states going on.
Me too.
If California was filled with city states, literally in like 40 years, we would get 20 Singapores. You know what I mean? Like straight up. Like
California was a country, its own country for like 4 years.
Yeah, but it's still
California
too big.
Republic.
We can't have the whole California Republic.
Right.
We got to have like, I want to see like Gilroy be like
Gilroy,
The garlic empire.
garlic empire,
The garlic monarchy.
Absolutely, yeah.
What is the story behind the garlic? I don't know about
Gilroy
the garlic.
garlic?
This is literally just like I grew up in the Bay Area, and I know that like down there they grow a lot of garlic.
Gilroy garlic is like
They have a garlic festival.
Yeah, they're like
There's a garlic festival.
yeah, Gilroy is like the #1 producer of garlic or something. And so like that whole town is
Also,
like,
artichokes. Don't they grow a lot of artichokes?
I mean, California is the 5th largest economy in the world.
Yeah.
Mostly
Yeah.
because of agriculture. So, we have a lot of agricultural fiefdoms and city states that could emerge
totally.
if we just let them.
Yeah, absolutely. Absolutely.
Yeah.
Yeah.
What else should we talk about?
Why did Bitcoin appeal to you when you learned about it?
And I think for me, it was like a combination of, I think I was not skeptical of it. I was like, oh yeah, of course.
Yeah.
This is the
but-
cyber utopian future that the sci-fi novels have promised me.
Right. And also that like I had been steeped in like reading The Machinery of Freedom and like all this like polycentric law, like the history of free banking in Scotland and like all this stuff. And then you eventually get to like, oh yeah, like this seems like an uncontrollable, unstoppable force for individual freedom that
In the
is-
digital realm. Yeah.
yeah, in the digital realm.
Yeah. I mean, I think like
And then like from a technical perspective, it's just insane.
yeah.
It's crazy.
Yeah.
Like, so it was both of those things. It was like, oh, this is so easy to understand. It's clearly going to be like huge for enabling people to do things that they otherwise were not able to do.
Mm-hmm.
And that it's a big pushback against the government in, government overreach and restoring that, like, oh, why do the haves and the have-nots end up being in the buckets that they are? It's like, you don't have that thumb on the scale that's pushing them. But then it's like, okay, how do I like think about how to answer that? I don't know. But
Yeah. I mean, I think like, from my perspective, there were things that were broken about money before the digital age. Like if you do the 1971 as like a breaking point, there were probably breaking points before and after that, but that's like a key one, obviously, that Bitcoiners like to point to. Like I see it as like something broke in 1971 when we went off the gold standard. And then digitization and the digitization of the financial system accelerated a lot of those problems. Like when you have things moving so fast and people can trade in a millisecond, you start to realize all the things that are broken a lot faster than you did before you had a digital society. And so like, I kind of think that I'm very sympathetic to, obviously I've played like the leftist role in this conversation, but like, I'm very sympathetic to people who think like money is fake, money is evil, the system doesn't work and we should burn it all down. Because in a lot of ways, that's how Bitcoiners feel. And I think it's like the conversation about priors is interesting because I think like if you come at Bitcoin with technical education or, a macro econ perspective or whatever, you're more primed to understand it and see how it fits into those things. Whereas if you just come from the perspective of like, the financial system hasn't worked for me, it feels unfair, but you don't really know how to articulate that, Bitcoin isn't like an obvious like click.
You might even put it in that realm of like weird financial bullshit.
Yeah.
Oh yeah. I think a lot of people put it in that realm.
Yeah.
And then it's like, no, this is a repudiation of a lot of that,
Yeah. It's interesting when thinking about my own priors and like, why did I get interested in Bitcoin? I actually don't think that I had much of a sophisticated criticism of money. I kind of hated the government. I was like, well, everything government touches is bad. But if you had asked me like, well, what's wrong with the dollar? I'd be like, I don't know. Seems fine, And I think the main thing was that I was in a position as a programmer when I learned about Bitcoin to convince myself that it was going to work.
Yeah.
And then start to think about the consequences of that. Like, oh, hey, look at this thing that is an alternative to the government printing money. Why would that be like good or bad? You know what I mean? Instead of like, I'm a gold bug, audit the Fed. Like I have all these like complicated ideas about money and this is the thing that fixes it. It was like, I kind of hate the government. And then the key is that I convinced myself that it like worked, that it was going to work. You know what I mean?
Yeah. and that it's unstoppable.
Yeah, it's like
you know, like even if you didn't want it to work,
is stoppable, but it's stoppable in a really
very
funny
complicated.
way.
Yeah,
But I actually think the way that it's like stoppable is like if the U.S. was like, all right,
We're going to be functional.
we're gonna
yeah.
we're gonna have you don't even have to have a fixed supply dollar. We're gonna print like 2% per year.
Right.
And like, or just have a fixed supply. Like, it's not hard.
We're going to pay off our debt.
Yeah, we're going to pay off our debt, you know, or not even pay off our debt. We're going to just have a fixed money supply and like credibly commit to it. And the debt is like a different problem, you know, that we're not going to like inflate away, you know?
Well, but if you don't have we're going to inflate it away as an option,
You're getting your back blown out, you know?
Yeah, exactly. I mean, it's like, I think it's that like you need to have these pushback. Like the reason why the internet is secure in some ways is because there are hackers out there trying.
Mm-hmm.
Like if nobody was trying to push back against what, you know, everyone was doing, like the second that one person gets the crazy idea, like, oh, we're going to maybe break into something, you know, it's like, oh, okay, that just like unleashes some floodgate. You need to have people who are pushing.
Yeah, right.
And
then you get like the, you know,
the metastable
uncontacted people
getting
wiped out by the chicken pox.
Right. Exactly. Like, let's not be, or like, let's inoculate ourselves.
Yeah.
In some, I think that Bitcoin as inoculation is a really powerful idea. You know, like that it's like, you know, even if it doesn't become everything, it existing pushes us to be better.
Yep.
Or something like that.
It's something that stands against. It's something that stands as like a peg to reality.
Yes.
Yeah. I mean, I feel like with the digital age, we basically, I mean, I think of the digital realm as like a new world that we're like walking around blind in, like figuring out when we bump into a wall and figuring out when we walk into a doorway and it like opens into this huge room that no one discovered before. Like, I think
holding at our hands, praying that they bump into some big ass titties.
Yeah, exactly. And that is in many ways the story of innovation on the internet.
That is the story of the internet. I hope there's titties in these packets.
Yeah, exactly. And that's what pushes us forward, you know, as a civilization. But I think like, you know, I feel like one of the problems with building out the digital realm and having that like, you know, blindness that we have in a sort of like enlightenment phase almost, where it's like, you know, until you understand how to paint with perspective, everything looks weird and you can't really articulate why, but then all of a sudden,
it's
like
flat and
like the cats look weird and like whatever.
Cats look weird? What are you talking
like
about?
medieval dogs and cats.
Oh,
like,
yeah, right.
You know what I mean? Like like why can't you
the
figure out how to
horse, you know?
Yeah, why can't you figure out proportions? Like what's going on? It's like until you have that like click moment, like you don't know what the problems are going to be. And I think part of the problem that we have with building out the digital world, which I think is like the story of our time, is just developing things in the digital world, is that we don't know the constraints and we also don't know how the constraints relate to physical reality. And I think Bitcoin, you know, is like essentially a tether between physical reality and digital reality, where you have this like this very digital thing that you can transfer you know, within 10 minutes or whatever, essentially instantaneously, but it's connected to a real world asset of energy that's like, it's basically the underlying asset, both the physical world and the digital world.
It's a battery.
I really
Bitcoin is a battery.
I really don't want to give Jason Lowry like any credit, you know, like the software guy.
I don't know who Jason Lowry is.
Oh wow, you avoided that. Yeah, I know who Jason Lowry is.
But like, like
who is Jason Lowry?
Like Bitcoin is the frontier of warfare and like whatever.
That like basically like Bitcoin will prevent violence because like Bitcoin is you know, like the ultimate security,
the ultimate like defensive technology.
Right.
Like not only is it a defensive technology, but it moves the conflict onto the digital plane where there's like no bloodshed. You know.
Yeah.
But I do think there is something there. I think he gets it like more or less completely wrong, but that there is some like tethering of.
Are you able to articulate what that is?
What is
what he, you know, what he gets wrong and what that like kernel.
Well, yeah, I mean,
is.
I think the thing that he gets wrong is just reading into stuff. A lot of his stuff kind of reads to me like speculative science fiction. that it's like, okay, there's a lot of like interesting ideas here, but is it true? Like, I don't know. Right. But like there is something about Bitcoin where you have this digital resource which requires like physical expenditure.
Yeah.
Right. That gets interesting. There's a really interesting link there. And I'm not willing to like speculate endlessly or even say what the properties of that link are, you know,
Yeah.
but it's fascinating. And it's like, that's why Bitcoin works. It's why, you know, it's like, well, why do we even want something to have a cost? It's almost like Bitcoin created, like, I mean, you know, really Hashcash created a purely digital object that has a guaranteed physical cost in the sense of like, oh, look at this data that hashes to this other piece of data that has this number of leading zeros. Like, you must have done a lot of hashes.
Yeah.
You know, like in the abstract, it's even like, well, why would you want that? Isn't the great thing about digital objects is that they're free and they have no cost? You know what I mean? But then it actually winds up being useful in all these ways, like Hashcash as a anti-spam mechanism. Yeah, it kind of didn't work. I think basically the reason it didn't work is because couldn't really get it standardized. There were other ways to prevent spam. It was kind of annoying, like whatever. But in Bitcoin, we sort of have this like manifestation of Hashcash that like, oh, it does work, you know? And it's like, and it's also like, it gets into like, why is money useful? You know, okay, like American Indians used things like beads, like shell beads as like money. And that worked for a long time until you had Europeans that came and they divorced the beads from the costliness of the beads, right? That like before you wanted these beads, you had to get shells, you needed to do this like very laborious labor, right? And Europeans, all of a sudden, like the beads were free and they got Manhattan for like a bunch of beads, you know what I mean? And it's like, no, actually the fact that the beads, wampum, yeah. The fact that the wampum was like expensive was a necessary and useful property. And that's very, very counterintuitive to people. Why do you want something that's like expensive, right? And then like money is the one thing that you want to be expensive. Everything else, every other good, essentially you want to get to like post scarcity.
Ooh, yes. So this is a thing that I think I didn't realize this about Bitcoin at the beginning, but it's something that I realized later, which is that like, you know, like everybody, like why did the housing craziness happen? It's like fundamentally that people didn't have a good place to put their money.
Yeah.
So they over index, or like people were like, I'm storing all of my life's value in a house. Right. But a house is a real thing in the real world that you use. And it's not just meant to be your store of value. You want to have the thing that is money not be
something that you use.
Right. The fact that it's useless, quote unquote, is a feature, not a bug.
Totally. Yeah.
You know, it's like you want the thing that is the most marketable thing or whatever to not have these like weird negative externalities.
Or to like have weird cycles. Like,
yes.
Oh, the thing that we use as money is now like it's Christmas and people want to put like Christmas tree lights on them.
Right.
Like, no, you don't want that. Like, imagine if we used Christmas trees for money and every Christmas things got more expensive because like everybody wanted the Christmas trees to put in their living room. Like, well, that's bad too. You know? Yeah. It's like, things are like non-money goods. We want them to be as abundant and as cheap as possible.
Yeah.
And then money good is like, oh yeah, we actually want it to be like, you can't make any more, super costly. Like it's like infinitely costly to make more.
Yeah. And to me, like energy is a crucial tether between the digital world and the physical world.
Yeah.
The physical world needs energy. The digital world needs energy.
Yeah.
And that's like a key thing that both of them share. And I think like, you know, there's so much that's different between those two realms. And that's why, you feel like if you got 1,000 likes on a tweet, you know what I mean? Like you said a funny joke and 1,000 people liked it. That would feel very different than being in a room and like saying a joke and 1,000 people laugh at your joke.
Oh yeah, that would be like, oh yeah, that was one of the best moments of my life.
Yeah, exactly,
you know what I mean?
exactly. Like it's very.
I'm thinking back to a time there wasn't 1,000 people. There's maybe like 100 people in a room, and I made a really funny joke.
Where? When?
It was at an Urbit meetup. Yeah, it was at an Urbit meetup. It was right after they designed their like glyphs, their sigil glyphs. And I made the joke of like, yeah, this is like, in the sci-fi movie where you're like getting the ruins of the alien civilization and there's all these inscrutable runes anywhere. Like, this is the precursor to that.
Mm-hmm.
Like, and everybody like laughed, and I was like, hell yeah.
Yeah, but I think it's like,
but like 100 likes on a tweet, like, who gives a shit?
Yeah,
like,
yeah. It's like, okay, great. Like,
Yeah, like,
next one, need to get the next one
Yeah.
out. Like, yeah, no, I think it's like we're simultaneously building and exploring this whole new realm that I think like competes with the physical realm in a lot of ways, but is also very like divorced from the physical realm.
Yeah.
And we need these tethers between those two things. And I think Bitcoin is an obvious tether. And it is like great that it's also the like value system as well, because then it creates that tether between like energy and value
Yeah.
between the two realms.
Yeah.
But I mean, I think, I love that that people like Jason Lowry are like putting out their ideas
Yeah,
even when they're wrong,
totally.
because I think like we don't know everything that Bitcoin can and will be.
Yeah.
And those ideas can spin off into, people being like, we need to put homeless people on the blockchain. That's what's going to solve homelessness, But it can also like lead to us understanding this like beautiful gift that we've been given.
Yeah.
You know what I mean? Like,
Yeah,
it's
yeah,
like you kind of need people to explore that like idea space.
Yeah.
And I think also, like it's cool to me. I love meeting Bitcoiners. Like, I love that I have so many Bitcoiner friends that are working in Bitcoin too, because you don't even realize the things that Bitcoin can like natively solve until someone builds the thing to solve it.
Mm.
Like, Bitcoin Futures is an example. I think of like Rob Hamilton, who we really want on the podcast. He's elusive. It's,
Elusive Rob Hamilton.
Yeah. Like, doing like insurance, like in Bitcoin script, right? Like there's things that can be done with Bitcoin that solve problems in the financial system that we don't even necessarily know.
Oh, I mean, like as an idea, like Bitcoin has primitives for making it so that you can't move money for a certain period of time.
Yeah.
That's such a crazy financial primitive. Like, that's wacky. Like, that's really wacky. Like, you can't do that. I mean, you can do weird shit, and but there's going to be counterparty risk. It's going to be sitting at a bank. It's going to be a contract that somebody has to enforce. Like, and then if we get covenants, like, so that you can both be like, we're going to restrict the movement. This money can't move for a period of time. And once it does move, it has to go into some future like way.
Yeah.
So that's like, holy shit. Like, that's a lot of like, I don't know what those things do, but those are clearly like very useful, very unique primitives.
Something that we're going to be doing with Bitnomial here soon is using stablecoins as collateral for margin and stuff like this,
as opposed to dollars.
Yes,
I see.
So like, we will always support dollars, of course, but like,
of course,
of course,
Pepe sweat
until the heat death of the U.S. government,
right? Yeah.
But we're gonna have basically, it's like, that you can move value faster than like 3 business days or whatever.
Right. Yeah, like that's because dollars. How long does it take dollars to move through the system, as far as you're concerned in your business?
Wire transfers are pretty. I mean, it's like if it's all within the same bank, it's instantaneous,
right?
But if you're doing wires, I mean, it's complicated. It can be up to days.
Yeah.
Like if you're doing
up
ACH,
2 days or up to 2 days,
up to many days.
Oh,
ACH and stuff like that. But like if you have that instantaneous value transfer or near instantaneous, that enables so much more in terms of like liquidity and all this. Like people are able to do things that they were not able to do,
right?
So
right.
Yeah, but I think it is like, it's the tether between like reality and abstraction, where it's like it's very easy for digital things and like the financial world to like spin off endlessly into abstraction with
a lot
no
of the
reality.
Time, like it's like everybody's writing checks ultimately that they can't cash.
Yeah.
The abstraction is not based on like, it's all contracts that are trying to be enforced that it can blow up. It's all like laws and regulations that can like blow up. It's not like, on this date, you're going to do this Bitcoin transaction and this money is going to hit my address and I'm going to be able to tell whether or not you made good on this contract, like instantaneously, you know?
Mhm.
It's all this like fuzzy, squishy stuff.
Well,
You
and
know what
that's
I mean?
why people want like the good regulator to like step in and be
Yeah.
like, oh, I'm gonna be
That
the
sounds
referee
like,
here.
that sounds like a movie, like The Good Regulator.
Yeah.
Yeah, exactly. Like it's like I think you mentioned earlier like a bunch of regulations moved in the 70s or whatever. Like I think all these things are related where it's just like when things are moving very fast and things have high potential to break because the things that are going to break at accelerating paces
Mhm.
because of
Yeah.
that fast movement, then what people like first think they want like a referee in there to be like,
Yeah.
wait, you're not allowed to do this. You're not allowed to do this.
Yeah.
But then I think the actual solution is like a technical one.
Mm.
It's like just try to tether it more concretely to reality rather than having like an adjudicator that's like,
Yeah.
no, that's not allowed. That is allowed, whatever.
Yeah.
Yeah, I don't know. I mean, obviously we're very, we're Bitcoin Maxi podcast up in here, but it's just cool. Like, I think people are building cool things on Bitcoin, whether it's like, we're in this weird, I don't even know what you would call ordinals as like a wing of Bitcoin. Like,
Have people done stable coins on
like runes.
or runes or ordinals? I
Well,
guess.
inscriptions are pretty bad for stable coins because
Yeah.
they're not fungible and
Right.
like you could do each one as $1, but
Right.
I think people have like I know there's one thing that I think is called ducats that I think it's happened, but the thing is
I've heard a couple of people come to me and be like, I'm building a stable coin
Yeah.
on runes. And I'm like, okay, good luck.
Yeah.
Yeah.
I think the thing is that like the stable coins, the way that stable coins work is that you have a company that has
Holds
dollars in their bank
dollars,
account
yeah.
and they're good for it, you
Yep.
know? And all the attempts at making these like algorithmic stable coins,
Yeah.
for one, the entire reason, well, they try to make it like trustless, like that's one advantage.
Yeah.
And the other thing is, well, they actually don't want to have the dollars in the bank account. They just want to like get the money from the system and like not have to tie up like $1,000. And so as far as our current technological limits go, something like Tether is the best thing that I could imagine. And Tether's problems are not problems that are solved by like the runes protocol.
Right.
You know what I mean?
Mhm.
Like Tether doesn't like benefit from like, okay, yeah, I guess it is good if it settles on Bitcoin, but like trade-offs, So it'd almost be kind of pointless for somebody to do stablecoins on runes. Like I basically just want Tether or somebody like Tether to be like, okay, here's Tether on runes.
Yeah. Yeah.
And
yeah.
if you want to be in the runes ecosystem, then you can like do it with runes. But like the idea of doing an algorithmic stablecoin, I'm like, okay, that's just like moral hazard. Like,
yeah.
like that shit's gonna blow up like bad,
Mhm.
Yeah.
Yeah.
Yeah,
Yeah,
we're always building a Tower of
Yeah.
Babel to God. and
What
then
about
God smites us.
what about inscription or runes futures?
Yeah,
and
one
options?
inscription in
yes.
runes
Oh, yes.
futures.
Yeah.
Of course. Well, one thing that's really cool about like our hash rate futures is that we build an index. Those are cash settled futures, as I was talking about before. But
Mhm.
they're all of the inputs to that are basically our futures, our existing Bitcoin futures curve that we have,
Mhm.
but then just blockchain data.
Mm.
It's basically like, oh, how much money are miners making for the amount of difficulty
Yep.
that they're putting in,
Yep.
or amount of hashing that they're putting in.
Yep.
You could imagine something that's really cool about ordinals and inscriptions and all of this stuff is that it's entirely on chain
Mhm.
and it's like easily verifiable. Whenever you have these like, I'm getting a little bit out on a limb here, abstraction wise, bringing it back, you could totally make a like index or
Mhm.
something like this on, like some collection of NFTs
Yeah.
or something like this.
Yeah.
I think the problem that you run into there is that like with commodity finance, it's like the things need to be fungible
Yeah.
in some sense.
Yeah.
It's like, okay, you're saying that this unit is equivalent to
Yeah.
this other
Yeah,
unit.
yeah.
And it's like that's the whole point of inscriptions is to like have
Yeah.
in
Yeah, I'm
different
not just
things.
I'm
I
not just
also-
gonna sweep any Bitcoin puppet off the floor. I want a ketamine shirt Bitcoin
Yeah.
puppet. You
I
know
also
what I mean?
I also think there's another purpose, another problem, which is that with commodities, once you've hedged all the volatility out, there's still a point to the commodity. You eat the beef, you grind the wheat into flour,
Right.
you make the frozen orange juice, you fry up the bacon.
yeah.
Right? Once you hedge all of the volatility out of inscriptions and runes, there's nothing left.
Yeah.
There's like, that was the whole point. Oh, there's no volatility. Like this shit should trade at 0.
I mean, do they have futures for like art
Not really.
or collectibles in
No.
any way?
And
No.
there aren't
Yeah.
even like tobacco futures, for example.
Why
It's
not?
like-
That
I mean,
seems pretty
it's like
obvious.
my understanding is, somebody could quibble with this, but I think it's that it's like totally vertically integrated. It's all just PMI, Philip Morris International. And
I
it's like,
see.
you
They
know-
don't have a lot of price risk.
yeah,
Yeah,
exactly.
interesting.
Like they
Huh.
they just are like, there's been just a race to the bottom there.
Huh.
And
Is that because, I mean, why? Is it because tobacco, cigarettes, that does not feel like, that feels like an industry that should be very competitive. Now,
Right.
the big difference I can think of is regulation.
right?
Is that why it's vertically integrated?
That's certainly part of the story.
Yeah.
I mean, I'm not an expert on this.
Yeah, interesting. One other thing about tobacco is that actually one reason you might not need tobacco futures as much is that
It's a very hardy plant.
very
as well.
hardy, very shelf stable.
Yeah.
I'm pretty
Yep,
sure
yep,
you can
yep.
process it and let it sit for months and months and months without much degradation of quality.
Absolutely. That's
Yeah.
a huge part of it as
Yeah,
well.
yeah.
Is,
Are
you
there
know-
coffee futures?
Yeah. Oh, yeah. Coffee futures. That's
oh, really?
big.
Okay.
Yeah.
Interesting. Yeah.
Um,
Coffee futures are really interesting. I mean, one thing we didn't talk about is like, you can sort of be very abstract and be like, oh yeah, orange juice futures, like hog belly futures, like, yeah, no problem, like makes sense. But it's like, well, like these things are not fungible. Like one pig is not the same as another pig.
Oh, but frozen concentrated orange juice, that is fungible.
Yeah.
You can take non-fungible things and make them fungible.
Yeah.
By just grinding them into a pulp and,
Oh,
literally.
yeah, right. Yeah, that's
know-
right. That's one reason that maybe you want orange juice futures concentrate as the future, because then it's like it is fungible.
It is fungible. Yeah.
I mean,
And
like-
there's a great story behind that. You should link in the description to this other video about frozen concentrated orange juice futures.
Mhm.
It's
Don't
so
send them away
fascinating.
from our channel.
I'm sorry. But yeah. No, FCOJ is the whole thing. Have you seen
FCOJ?
frozen concentrated orange juice?
Oh, got it. Okay.
Yeah. Have you
Give us the story.
seen Trading Places?
I have not. I know
Mm-mm.
of Trading Places,
No.
but I haven't
Oh,
seen
this is such a classic movie.
it.
It is
Okay.
like
I'll make a note to watch it.
it is and you should intersperse editor, you should intersperse bits about frozen concentrate or the bits from Trading Places in it.
We are here to try to explain to you what it is we do here.
At the end of the movie, okay, back on. So Trading Places is a movie with Dan Aykroyd and Eddie Murphy.
Think big. Think positive. Never show any sign of weakness.
And I want to say Eddie Murphy's like
Homeless,
like
like a homeless guy,
Yeah.
maybe like a con artist or something.
Yeah.
He's getting arrested at the very beginning of the movie for like for pretending to be not being able to walk.
Yeah, exactly.
Yeah.
That's exactly right.
Yeah.
So he's kind of a con artist. Dan Aykroyd is he's a broker. He works at a what would now today be a futures commission merchant.
Mm-hmm.
What is it? Mortimer and Duke or
Mhm.
something so Mortimer and Duke. Well, I don't want to spoil the whole movie, but basically, long story short, they have a bet that this con artist would do just as well as Dan Aykroyd's
Mhm.
character if they gave him the job of being
Mhm.
like a
Mm.
commodity trader. And
Yep.
and then long story short, they end up figuring this out, and then they scheme together to
Mhm.
screw over Mortimer and Duke.
Yeah.
And in the end of the movie, they go to, I believe it's COMEX in the World Trade Center. They
Yeah.
go to New York, and there's this incredible scene where they intercepted the crop report from like the agricultural department
Mhm.
or whatever about orange juice future or like the orange juice harvest, the orange harvest. And it's like, basically what they end up doing is like they end up giving Mortimer and Duke a fake crop report that says the winter was really bad.
Mhm.
So there's going to be a low supply of oranges. So then the frozen concentrated orange juice will go up in price.
Mhm.
You know, because it's like, oh, okay, there's small supply of oranges. People want their orange juice. Frozen concentrated orange juice futures are going to go up. So then basically in the movie, the price gets like driven up by crazy by these guys buying and buying and buying frozen concentrated orange juice futures.
Mhm.
Hey, the Dukes are trying to corner the market.
They know something. I can feel it.
Let's get in on it.
And Dan Aykroyd and Eddie Murphy are selling it to them at this very high price.
South Dakota April of 142!
And then the crop report comes out and it says, oh, it's a mild winter. You know, so then everyone's like, oh, there's going to be a ton of oranges we're going to buy. So they had like already sold futures on the frozen concentrated orange juice. And then the price goes way down. Mortimer and Duke are losing all their money because they bought it at this really high price.
That's not right. How can the price be going down?
And then, you know, they basically say like, we're willing to buy at this really low price because no one was buying at the low prices. And then the pit, like, you get this unholy scream of like, you're buying.
When people think of like degenerate, like stock trading floor action, they're thinking of commodities trading pits.
Yes,
with the open outcry system and people in like
their hand signals
screaming at each other. Yeah, there was a great radio piece about I think it might have been called Open Outcry.
Yeah,
about like the insanity of the pits and like. One guy saying like, yeah, like, you know, I could feel the guy behind me, you know, pressing down with his hand on my shoulder, like getting up to like scream like what he was buying and selling at. Like, it's like pure capitalism.
Yeah. And so he, you know, they end up buying all these frozen concentrated orange juice futures at really low prices, but they make a ton of money because they had already sold. You got to buy low and sell high.
That's the secret, baby.
But with futures, you can
sell high and then
buy low. You know,
which is fucking crazy to think about. I mean, I actually think that that's like a really good like thought experiment. It's like, okay, if you are buying and selling a normal thing, well, you can't sell high and then buy low because you don't.
You need to have the thing.
You have to buy low and sell high,
right?
But with futures, you can sell high. Like let people lock in a high price and then later get the thing at a low price to fulfill those contracts. Right. You can invert it.
Mm-hmm.
And then Mortimer and Duke are, I think they lost like $300 million or something in the movie, you know, where they were selling at this really high price based on the fake crop report. And then they had to try to buy as much as they could to get out of their position. Yeah. And then they were completely blown out.
Yeah.
The movie's amazing. It's really
actually
fun.
It's a very communist socialist message.
I was going to say it's a real Robin Hood situation.
It is a really Robin Hood situation.
But it's like
it's a rags to riches story.
The title Trading Places, like it's based on the idea that actually people are fungible. Right. And you can take a random have-not and
a random homeless guy,
put him in a suit, put him on the floor of the Chicago Commodities Exchange, and he'll be rich in like a day.
Yeah.
That's the message.
Yeah, exactly. And vice versa, that the rich guy, you know, you just take away his, you know,
his insider
cushy
information.
Yeah, exactly. And then he'll be, you know, destitute in a day or two or whatever.
Unfortunately, it's not how things actually work.
Right.
Like,
which is the thesis of the movie. And it's beautiful.
Isn't that the thesis of the movie? Isn't it that is the way that it works? That you can take a random homeless person and...
Well, I think it's maybe more that... that people aren't fungible, you know, like, yes, there is absolutely like inequality and like inequality of like Eddie Murphy's character absolutely does just as well. Mm-hmm. But then he, I'm not trying to make some elitist statement that like some people are better than others. Mm-hmm. But I do think that it's like, how to phrase it? Not that people are better than others, but I'm like losing steam on this thought.
Homeless people are the same as the con artists. And
Homeless
the,
people.
But people are, it is like this humanist message of
Mhm.
like, oh, yes, people have different opportunities and experiences, but they are able to, like, I don't know. You can't just treat people like things.
You can't just treat the frozen orange juice concentrate as if it's
No.
the
Right,
harvest
you
from
can't
the fresh
just, like,
oranges
take
from
people
the
and
winter, the
shove
mild
them-
winter.
Right. What I meant was that Mortimer and Duke are treating people like commodities,
Mm-hmm.
and people aren't commodities. They'll trick you.
That's right.
They'll screw
They
you
will
to the
trick you.
tune of $300 million
Yeah,
or whatever
yeah.
if you try to mess with them.
Indeed.
It's beautiful.
Yeah. Which would I be Eddie Murphy, or would you? I think like
You're Eddie Murphy. You were in your like academic con job.
Yeah.
I lifted you up out of the moral and intellectual bankruptcy,
Mhm.
and now we con people with our podcast.
Yeah, exactly. We
Yeah.
con people into listening to us.
Yep. Should we call it there?
Yeah, we should wrap it, I think.
Yep. Sounds good. Thank you very much for coming on. This has been a
Thank you
great-
for having me.
Great
This was a
conversation.
wonderful conversation.
Yeah.
I guess, bitnomial.com.
Is Bitnomial something that like could a normie get on Bitnomial and start to use it?
Yes, we started as a institutional focused company, but our goal is to be like the place where price discovery is happening for all these things.
Yeah.
So we are trying our best to make it so that individual traders can get started on our platform.
I was actually thinking that maybe I should use Bitnomial. Like I should be like, okay, well, I know I'm gonna have to sell some Bitcoin. So I think the price is like relatively good right now, but I don't need to sell it now.
Yeah.
So I am going to buy an option at the current price and just hold it because I want to be able to sell in the future, essentially.
Yeah.
Yeah.
Buy a put option.
Buy a put option.
There we
Indeed.
go.
Yep.
We've
Yep.
learned so much.
Yeah.
Yeah.
Yeah. Or I could get really degenerate and sell call
calls.
options.
Yes. That's the, what people say is that you're picking up pennies in front of a steamroller.
That's right. Yeah.
Where it's like, oh, okay, like you're like collecting yield or whatever on your thing, but then the price goes up.
Yeah.
And you're just completely screwed.
Yeah, totally.
Yeah. But yeah, I guess if you would like to sign up, we have bitnomial.com that you can go to. But I would also say that we're building a trading user interface.
Mhm.
And you should go to botanical.finance.
Hell
Okay.
yeah.
And there's a place where you can put your email to sign up to get on our waiting list.
Alpha.
Okay,
For our new-
botanical.finance.
Yeah.
I like it.
Yeah, that's our trading platform that
Awesome.
we're working on. But I should also say,
These things are all risky.
these things
Number
are
go
risky.
up and number go down.
We have a number of different brokers that you can work with as well. We have, Merex and RJ O'Brien and a number of other.
None
It's
of
a
which is better or worse than any of the others.
Yes,
They're all
exactly.
And it's a
options.
free world. You can do whatever you want,
can do-
baby.
yeah, exactly.
That's right.
Yeah, attend your local Bitcoin meetup.
Yeah,
That's how
Attend your local
that's how
Bitcoin.
we met.
Come to San Francisco Bitcoin the San Francisco Bitcoin Developer Meetup. It is a ton of fun. We go over like kind of all the different topics that are going on, and yeah.
You may see myself and young Matthew here hosting it at some point.
Yeah.
Mhm. Yeah, I think you guys would do a great tag team hosting.
We did
We've
it
done
once,
it.
I
We've
think.
done it before.
Yeah, it's
we've
great.
done tag team hosting.
Yeah.
Maybe only once.
Yeah, I think so.
But
Yep.
we should do it again.
Yeah, absolutely.
Yep.
I'm down.
Now we're gonna get a flood of Ordinals degens. and
Yeah,
us
Yeah,
about
yeah,
this.
yeah.
I am
You're like,
actually a
oh,
little
fuck.
bit worried about that. Like, I don't necessarily want to broadcast it too heavily.
Yeah,
But yeah.
But wherever you are, maybe not in the San Francisco Bay Area.
Yeah, go to your local Bitcoin developer meetup and go to the Socratic seminars. They're a ton of fun.
Yeah,
Yep.
it's interesting.
Totally.
Cool. All right. Well, thanks, Matt.
Thanks,
Yeah,
Matt.
thank you
Love
so
you.
much for having me.
It's our pleasure.
Love you
Thanks for
guys.
coming on.
I mean, you guys are like bestie status.
It's
for
bestie
me,
status
so-
up in
hell
here.
yeah.
Yeah,
Yeah.
exactly.
So-
And all the viewers that made it this far
Yes,
are bestie
yes.
status.
Besties.
Yeah.
Okay. All
Cool.
right. Let's
Thank
send
you.
it.
Yep. Thanks, guys.
Bye.
Bye.
Bye.